then Rob's here from Mortgage Choice today to talk to us about equity in your home. So it has a number of different avenues, the word equity, doesn't it?
Yeah, I was
Interestingly.
trying to make the link there between the legal definition, which is about equality and fairness and all that kind of thing, and then the finance definition, which is really, I suppose, it's the equaling factor. So we'd say that your home equity is the value of your property less the mortgage equals your equity. So it's the balancing factor. So it's I mean, if you've got a property worth $600,000 and a mortgage with a balance of $200,000, you'd say your equity is $400,000. And from a finance perspective, that's a valuable resource that you can put to use in a whole lot of different ways.
What could I use it for?
You could use it for all sorts of things. Probably the most common use of equity is to leverage. Another finance term, we talk about leveraging off your equity to borrow to buy another investment property, for example. So loans have to be secured by property. So if you've got enough equity in your current property, it could very well be that you don't need to put any cash in to buy an investment property. So with that example there, property worth $600,000, a loan currently at $200,000. If you took your current lending up to 80%, and you could go to 90%, but there'd be mortgage insurance. So if we take it to 80%, that will give you, what is that? That you've got up to 480,000. So that's right, $480,000 would be.
And we
at
started
80%.
at 200.
Started at 200. So you could have access up to about $280,000.
There we go.
And that would probably be enough to buy a property, I don't know, say around $550,000.
Yeah, similar sort of numbers, really,
so
isn't it? Yeah.
That would provide you 20% deposit plus your stamp duty and costs. That's probably the most obvious one. But there's other things that you could use it for as well. It might be to renovate your property or to do some essential maintenance. It's a much cheaper form of finance than financing it through a personal loan or through a credit card, as some people do. A lot of people do that. They finance it through a credit card. Not recommended. Better to use your equity first and increase your lending. And another possibility is debt consolidation. But again, there's some warnings around that. So if you're struggling with cash flow and you've taken on too many consumer debts like credit cards, personal loans, maybe you've done that to do the renos.
Yeah, that's what I was thinking. So you've maxed out the credit card, you got a personal loan to do your renos. Help! What do I do now?
It happens. And sometimes some of the most satisfying loans that we do for people, the most life-changing, when we do debt consolidations, because it changes a person's cash position quite significantly and can make a big difference.
Well, hopefully the renovation increased the value
that's
to increase
their
equity.
Yeah, but there's a warning, of course, with that. We have a number of, you probably do, Peter, a number of repeat clients who it actually starts to develop a really bad habit, and there's some clients, and it's like every 2 years they come back for more debt consolidation because they've maxed out their credit cards. It really is a dangerous habit to get into.
And particularly if you're stretching that out over 30 years.
It does make it manageable and affordable, but what you're actually doing by doing that is decreasing your equity. Yeah. Because each time you consolidate those loans, you're increasing your lending, and if the value of a property is not going up at the same rate, you're actually decreasing that equity. So while it can be done and it will make a big difference, it's really important when you do a debt consolidation. It's like a red flag that you haven't been managing your finances properly. Yeah. And some changes really need to happen.
And I guess a good idea, what I sort of say to clients is, if you really need to free up some cash flow, take advantage of a home loan interest rate, but take it over a 5-year term. You don't have to take it over 30 years, because
sometimes they may not qualify to do that, but it's probably better. Like, for example, if you're using your equity to purchase a car, you might only have the car for 5 or 10 years. Yeah. So it would make sense to have that as a 5 or 10 year term rather than a 30-year term. Yeah. Because that asset isn't going to last that long. Yeah. So there's lots of uses, but there's also some traps too. Yep. If you manage it the wrong way.
So how do I access my equity?
I think that's the most important question, because it's interesting, and that's what's prompted this topic again. I know I've spoken about it before, because there's a lot of people don't understand this, and they actually imagine that when we talk about accessing their equity, that it's like there's this
cash,
bank account that's sitting there. How do I get my hands on this account so that I can withdraw this cash? And that's not what it is. It's probably the way that we the language that we use, what we should say is increase your borrowings using your home equity or the increase in your home equity to secure the loan. So it's really just you've got to increase your loan and you're using that increased equity to secure that new lending. But you've still got to qualify for the loan just like you would any other loan.
Yeah.
So you've got to prove that you've got enough surplus income less commitments to service that loan. And secondly, you've got to prove to the lender that the purpose for the use of those funds is acceptable as well. So it's got to be acceptable. If you just want to have the cash there to, I don't know, well, actually, if it's business purpose, they don't like that on consumer lending. Or it might be other things. If you want it to kind of, I don't know, go gambling or something, they're not going to approve that either. But things like debt consolidation, which the lender might control the funds on that, buying property, renovations, that sort of thing is usually an acceptable purpose. I mentioned business lending. You can use your home as security for business lending too. I should have mentioned that as well. But it normally would be a business loan or it might be an overdraft too.
Because that's the important thing to know, isn't it? That this equity that you've got in your home is actually, you're providing that to the bank to secure a new loan.
Yep,
so it's not like you said, it's not a bank account, it's not cash that you can...
It's the security that allows you to increase your lending. I was just going to give a little warning though about some of the business lending, and I've seen, and you probably have too, Peter, a whole lot of business lending where, and I really recommend, and I know I'm a broker, I'm going to recommend myself, or us as brokers, go to your broker when you want to get some business lending. And there's good reason for that. We represent you, the client. We are representing you to the bank. We will give you advice in terms of structure. If you go to the bank's representing themselves. And I've seen so many clients just totally tied up by the bank, and the bank can be very heavy-handed in taking security over loans.
Yeah.
And we're able to look at it and say no to the bank. They don't need that much security.
Yeah.
And I would sort of err on the side of caution on giving banks security on loans. A lot of the time, like overdrafts, I don't think you need secured overdrafts.
Yeah.
You're giving the bank too much control. So we can look at all that and give you advice on it to make sure that the bank doesn't tie you up tighter than you should be already tied up.
And it's like, we've had a great show today about sort of leaning on professionals in certain areas, and the fact that, Gabriel from Financial B, and then also Karen, and around that fee that you pay. So in broker world, you don't pay a fee, but the broker only gets paid to ensure that you actually achieve a loan approval and you get the right advice. So it's a real big advantage that that's actually a profession that you don't have to pay for. And our goal is to make sure that
it just makes sense. We're representing the client. We want
all
a good
the time.
outcome for you.
Yeah.
But it's also like what we've been saying throughout the show is that, don't be afraid to go to a broker.
Absolutely.
Like, even if, your finances are pretty terrible or messy, that's, you know how to deal with it.
Look, it's actually very satisfying.
It is,
Sometimes
isn't it?
a lot of work, and I'm glad when it's done, but it's very satisfying to be able to unravel some of these situations people get themselves into, and it is enormously satisfying.
And put them into better positions.
Absolutely.
Financial security it's such a big thing that we all aspire for, and if you can get some assistance along the way to help you out with that, why wouldn't you?
Well, yeah, but I think the thing with home equity is those that don't qualify for a loan but have a home. So, for instance, my dad's just had $20,000 back operation, and yes, they own their own home, but no, they don't qualify for a loan.
Yeah.
Yep.
That's a tricky one.
And that's why you still have to qualify for the loan. So you might have equity, but you may not be able to access it.
And can you afford to repay it? Because you've still got to repay it.
Right.
And whether or not you as a client, you're that right profile for that particular bank that you've always banked with, or whatever the situation may be.
And it might be other products. I mean, I'm not a big fan of reverse mortgages for a whole lot of reasons.
Yeah.
A lot of caution. There should be a lot of caution around that. But
there should be a lot of independent advice around that.
Yeah.
Absolutely. But in some cases, it could be the right
It could
solution.
work. That's right.
But a lot of caution on that.
Thanks, Rob. As usual, very, very informative.
Can I just say, the way to look at it, first step, talk to your broker.
Yeah.
We can do an upfront valuation and an assessment to work out if you're going to qualify first.
Perfect.
We'll do all that sort of thing. before we actually start a loan process. So talk to us and we can give you some advice.
Yeah, because
around
it's also very important that people don't go around applying for loans themselves.
Yeah, that's right.
Because that's a bit of a trick.
So a lot of the time we'll do a valuation first.
Yeah.
So we can actually work out what equity you have before we put in an application, as well as pre-qualifying you based on income.
And having
risk
that discussion
expenses.
around your
Yep.
affordability and whether or not this is suitable for you and all
That's
those
right,
wonderful
all that
things.
kind of thing.
How do they find you, Rob?
Well, give us a call at the Blaxland office, 4739 9749, or go to our website. I think you just type in mortgage choice, or just type in my name, Rob.
Just type in,
Williams, or
yeah,
mortgage
you
choice,
rank up
Blaxland.
there.
It should come up, and send an inquiry.
If not, tutors, you go past him on his bike.
And
right.
congratulations for you too on successful finalists at the Business Awards.
Oh yeah, good to be a finalist again.
Yeah,
Looking
yeah.
forward to the night in a couple of weeks' time.
Yeah, I look forward to seeing what you take out this year. I know that you've been very successful
Well, we'll see
in.
how we go. It was a bit of a rush job this year when I was sending off that application at about 3 minutes to 12 before the
Oh,
cut-off.
far out! Talk about living by the wire.
I left my run a little bit late.
And you too, Catherine. You had you're a finalist this year,
I
first
do.
time.
I think I was 2 minutes to 12.
Oh, you two, dead set. And how long do I preach
Thrive
about it on the
pressure.
radio?
We thrive on pressure.
Yeah.
Nothing like deadlines.
The best work is done, the morning before the High Court on a napkin in the breakfast table.
I'm finding that at the moment I've got so much going on in my world that, I'm actually having more success getting stuff done at the moment while I've got so much to do that I have for the last couple of weeks. So I'm a bit of a procrastinator, so it's really good when my time management's on fire at the
It's
minute.
nothing like the judge saying, and what do you say to that? And you go, yep.
I wasn't listening. Anyway, fantastic, Rob. Rob, thanks so much for a great topic too on how to access your equity in your home. And again, if they want, anyone wants more information, they can give you a buzz, 4739 9749, or look you up, Rob Lees, on Google.